The management of Piramal Finance joining us on the show. Aisha, let's discuss their earnings as well.
Oh yeah, absolutely. In fact, let's hear out what the management had to say. Here's an excerpt of their chat with us.
The big story for us in this quarter was the application of some of the RBI circulars that have come out, particularly with respect to how we treat AIF investments. RBI, of course, as you know, came up with a circular on December 19th on how AIF investments by financial institutions should be dealt with. And they said that if you have any linkages of underlying exposures with AIFs, then you should make full provisions. At Piramal, we had 3,500 crores of AIF exposures, which we had disclosed a couple of days after RBI circular came out in the spirit of full disclosure. And of that 3,500 odd crores, about 1,700 crores, there was a linkage, i.e. the underlying exposures were clients were also our clients. But to be conservative, what we have gone ahead and done is taken the entire 3,500 crore exposure to AIFs and made a full provision on that and kind of taken that off our balance sheet. So that kind of one-time hit of 3,500 crores is what moves all the numbers. And so that flows into the profit and loss account on a post-tax basis as about 2,600 crores of hit. X of that, the company made a profit during the quarter of 290 crores. But once you actually bring in that 2,600 crores, there was a net reported loss of about 2,400 crores.
Fair point. So, but excluding these provisions, when I look at the operating metrics, your EM growth has been 6% sequentially, almost 9% YOY, and also wholesale 2.0 AUM has been 24% QOQ. Talk to us about the loan growth and the segments of loan growth. I mean, I remember a very interesting presentation from your team just 2 quarters back on how you're looking at the tier 2, tier 3 side. How's that shaping?
Yes, so loan growth is shaping up very, very well. We're feeling very good about the growth opportunities that we are seeing in the market. One of the things that we did this year is actually split our book into two parts, what we call the growth book and the legacy book. The legacy book, of course, we will continue to unwind and bring it down close to zero in the coming quarters. But the growth book, we are seeing some really solid growth. We are seeing about 63% growth year on year in this part of the book. It is now 48,000 crores in total size. We are seeing strong growth in mortgages, housing loans, loan against property, etc. We are seeing strong growth in used cars. We are seeing growth in the developer segment. We are also seeing growth in the unsecured lending segment. So all segments, we are seeing some very well-rounded growth opportunities. And as I mentioned, 60+% growth we have had year on year in that growth segment, going up to 48,000 crores. Now, let us see what the new financial year brings. But right now, just looking at the market, it looks like the growth environment continues to be very, very strong. Optimism in the consumer sector and the small business sector continues to be very high.
Jairam, I must congratulate you and your team the way you are steering this, the tilt towards retail last few quarters. It's very visible. You had promised that it's happening. Talk to us, what is the stage right now as far as wholesale versus retail is concerned? And the next few quarters, how do you see the advancement towards more and more retail coming in?
Yeah, no, that's a great question. You might recall that about 3 years ago, Piramal was 95% wholesale and 5% retail. As of this quarter, we are 64% retail and 36% wholesale. So that shows you the massive shift that has happened within the portfolio at scale. So we are a 60,000 crore book. So at that scale, being able to drive that kind of mix shift shows you the level of execution that needs to happen for us to get there. Today, we have a 43,000 crore book in retail. About 30,000 crores of that is mortgages, which is housing and loan against property. This is our core business, affordable housing, and we are seeing very good traction there in the smaller towns and in the outskirts of big cities. It continues to grow nicely, though of course. With the post-COVID effect having waned off a little bit, We are seeing a little bit of slowdown there, and I'm hoping that in the coming months or quarters, maybe some of our old schemes like the Pradhan Mantri Awas Yojana, etc., some versions of them might come back, which can help these customers more as well. That's one area in which there's a little bit of softening as people have run through their savings, post COVID. The rest of the market, we continue to see good, strong growth. Cars are seeing very, very strong growth. And we are also seeing a movement towards larger ticket, both within housing and within cars. We are seeing a movement towards larger tickets. So overall, we are very happy with the growth prospects and the geography spread. We've opened another 25 branches during the course of this quarter. So we now